Buy, sell or rent your property with Century 21 and you could win a brand new 2-bedroom apartment on the Sunshine Coast in Queensland. Visit c21win.com.au for your chance to win.
Welcome back to Your Property Empire. Well, joining me tonight to comment on our stories is Rob Southwell, Managing Partner of Pitcher Partners Accountants and Advisors. And as usual, we've been joined by the great Charles Tarbey, Chairman and owner of Century 21 Australasia. Well, Paul from Brisbane sent us an email and he asked, I missed the Property Buyers Expo in Melbourne recently. Would you mind sharing your thoughts on how young people can enter the market using their parents' equity, which is obviously a good question, something that we've pulled up a few times, Charles. So I guess the first question is how practical is it for a first home buyer to actually save a deposit these days?
It's getting harder and harder. I've got team members work in my company and they're generally couples. They're generally couples that are still working into their late 20s. That are having to do that to achieve a chance, especially if they want to buy, and the problem is, again, same story, if they want to buy where they want to live, not where they can afford to buy. So it is incredibly difficult for them, particularly in capital cities like Sydney. I think it's a lot easier, certainly in Brisbane suburbs, Adelaide suburbs, and Perth is getting a lot easier too.
But even so, with 5% deposit and 5% cost, 10%... still 50 grand. It's pretty hard.
It's very hard. It's very hard. And then you've got the issue of affordability once you get to that point. So if you're going to go and borrow off your mum and dad, then the banks have tightened very strongly on that too. I mean, you can go to a bank and say, I'd like to get some equity, and if you say, I'd like to get some of the money out of equity, they say to you, well, what are you going to use it for? You can say, well, I'm going on a holiday around the world. I'll give you the money. But if you say, I'm giving the money to my kids against a home, well, that's a different story. They might say no to that. Which is really bizarre, isn't it?
As long as they confirmed in writing so you can give it to your kids. So I'll try to help you out, but I can't. So, Rob, a lot of people think that if they delay the decision, it's only going to cost them a few dollars, but you've actually brought a graph in that shows it could actually cost them a bit more than that.
Yeah, so, I mean, Warren Buffett talks about, I mean, he's the king of scrimping and saving, but really it's all about compounding. And I think a lot of people don't appreciate the compounding over a period of time. So if you look at there, if you wait, so there's 4 different lines there. So you're looking at, assuming that, you know, the rule of thumb that property doubles in value every 10 years, if you wait, you know, 10 years, you could be missing out on not just the differential in the first couple of years, but ultimately, you know, over the course of 15 or 20 years, you're actually missing out on, you know, potentially millions of dollars in value. So it's not...
It's really having a tighter frame that if you start early, you might get 3 doublings of the property market versus only 2.
Exactly. And then you've got what I was talking about, the compounding effect. So if a property's $1 million now,
yeah,
and it keeps going up, it's $2 million even at 5%. So the absolute dollar term just becomes a much bigger and bigger.
In other words, I guess what you're saying there is it's just going to get harder.
Yeah.
Unless the prices come back, and they've only been doing that in one capital city, and that mostly, and that's in Perth. So unless that happens, it's going to be harder, or people get higher salaries, and that means then the employers are going to be slugged with that, and then the issue of company tax kicks in again, or the discussion on it. There's a whole range of things, and somebody's got to pay at the end of the day.
Now, you mentioned before about using parents' equity. Some people still don't get that. So in really simple terms, can you explain how that physically works?
Oh, it can work in a couple of different ways. I guess the parents can go and get a personal loan if they like, or an extension of an existing loan against their debt right now, and just gift the money to their children. Or they can co-join, they can buy a property together, they can use the existing home, which is the one that banks have been concerned about. They can use their existing home as collateral. And that becomes a danger, because there was an issue back in pre-GFC or during GFC where some mums and dads looked like losing their home and did lose their home because their children defaulted. Is that what you saw?
We didn't see...
Sorry, Rob... what's your name? Chris. Chris should be asking you that question. Away you go, Chris. Sorry about that.
What I was going to do quickly for time, you had some tips that we'll pull up on the screen of some things that parents can do to kind of get the kids involved.
Yeah, I think probably the biggest way to minimise the risk of what Charles was talking about is to make sure that you do the numbers properly and give yourself plenty of buffer. You know, it's no secret. It is hard. The first home... like most things, the first one's the hardest, the second one's the second hardest, and so on. So to do the numbers, I think you've got to be really on the ball to know where your pressure points are. use the worst case scenario instead of saying, well, if we did it like this, maybe we can get it over the line. That's going to end up in trouble. And excuse me, and use a broker that's done it before as well, so they'll be able to tell you what the banks think of it before you rush in. Make sure you've got all this lined up before you go to auction. That's the one thing I tell friends, family, clients, that if you're going to go buy a property, be ready to go. Don't just rock up and with the number in hand thinking that you're going to buy it, because that's how things go bad. And also to making sure the documentation's in place, particularly for the parents. Sometimes they think, oh, it's family, but that's probably the time you need it the most.
Can I just make a quick point, Chris, regarding that and regarding the children getting in to buy a home? A lot of people say that you just got to get into the market, and I really think it's important that we caution people that that's not the case. Sometimes you get into the market, into the wrong places, you get some good rental return, but you never get any capital gain. So it's important people make...
You've got to buy the right property at the right price.
Really have to.
And
really
get the advice.
Yeah.
Let's quickly jump into your numbers so we can get through them. Auction clearance rates.
They've been pretty good, actually, a little bit better than this time last week. They had a lot of properties go to auction too, so 78.6% was the actual clearance rate. Sydney came in at 81.5%, followed by Melbourne at 80.1%. But the one that I like the most this particular week that started to come good, and we talked about it last week, is Brisbane. So Brisbane had a 63.6% clearance rate. Now, I haven't seen a clearance rate for Brisbane like that in a very, very long time.
So certainly some good news up there.
Yeah, real good news.
And I think homes advertised for sale.
We always look at that and strong. We always look at that with
favourite
interest.
number.
I know, but it's climbed 4.55% this week over last week, and it climbed last week over the week before. So we've had a really good movement in that. But the one thing that I'm still not completely excited about is because it's still 2.54% in terms of the amount of stock available today compared to this time last year. So we still have a lower stock.
We've got a long way to go.
And we've still got interest, a lot of strong interest out there.
And what's happening with rents at the moment?
They've been steady, not really a great deal of change there. We've had a bit of movement last week in places like Hobart going negative and Sydney going positive, and that sort of trend still remains at the moment. There's a lot of interest in places like Hobart. Investors are starting to look there, and I think the more they do, then I think the rents might lower a little bit, go backwards a little bit, but that's okay. It can cope with it.
And then finally the vacancy rates.
Yeah, they're really good, really strong. Perth is still one of the biggest issues, although it's coming back slowly. It was in the 11s, it's at 10.36, so that's great. But the best one has been Melbourne again, a few weeks in a row at 1.49%, and that was followed by Sydney at 1.8% vacancy rate. So those three combined gave us a rate again, that's that magical number, 4.55%. Those three collectively, so there you are.
Wonderful. Charles Tarbey from Century 21. Rob Southwell from Pitcher Partners. Thanks for joining us. Thanks for joining us at home. We'll be back again next week. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.